Hello, everyone. This is a second part in our series on the world of robotaxi and superhuman driving. And this second part, we're going to discuss the value of superhuman driving for Tesla next year and beyond. Our first video was about the 5 to 10 year lead that Tesla has if they get robotaxi fully solved next year. Here with me is
Yeah, Brian, how you doing?
so in our first video, we basically described how with let me just pop up the deck here, just go over one of the slides. So basically, we're at the point now where version 13 is coming out, and this is Frida Dwan of Altimeter Capital's analysis, where we go 5 to 6 times better on disengagement ratio, which gets us from very far from human driving, the gray bar, to quite close, and then another improvement, and then we can go beyond human level driving. So the presumption is that this will happen in the Q2 of next year, where we have that leap to go beyond human driving. So if we're beyond human driving, that is superhuman driving. We all know that ARK Invest has made huge forecasts on what happens with Robotaxi. So the timing that I see on the money is that last quarter, Tesla made about $340 million on the sale and subscription of FSD based upon their 10Q filing. So that's US only, US Canada only, because they're not offering it yet in China or in Europe. But supposedly that would happen in Q1. And if, as we expect, version 13 comes out and we get very close to human driving, then the adoption rate should increase from 12% perhaps to like 25%. So if you have a doubling of adoption rate, people who buy FSD along with their cars, and then we also have a tripling of the markets we can go to, Europe and China and Asia, then you're looking at 6 times that. So that could mean Q1, Q2 numbers of 6 times $340 million, which would then be 1.5 to $2 billion in a quarter, which would be nearly all profit, and that'd be substantial because Tesla made like $2-3 billion per quarter. So this would be nearly double by Q2, and then Q3 could see the beyond human level capability according to the projections. So then you're in superhuman, and then the adoption rate could go beyond that, and also if the other car companies recognize that they're 5 to 10 years behind, they would start giving up, and they would say, okay, why am I paying NVIDIA? Why am I spending $2 billion a year trying to make my own project, which I'm not going to solve for 5 years? If they're paying $2 billion to other companies already or to developers, they can just say, I will buy from Tesla. And if I spend less than $2 billion to get a bunch of my cars going, I'm ahead. And then if I just adopt the one that is a standard, choose to do that. You have a response to that?
Yeah, so
Randy?
I hadn't thought about that part of it before. So if the number of people taking either buying the full self-driving when they purchase the car or just buying it after they purchase the car, if that increases dramatically, as you point out, because of China, Europe, and also higher adoption rates, which I certainly expect higher adoption rates. And then, of course, you have the folks that are on subscription, that would increase as well. And that's only talking about the 3 major markets. You're also, you got Australia, Japan, et cetera, which might also start to see. One of the things you didn't add in there was, I believe, that once it reaches even superhuman, but when it's truly a chauffeur, which you're saying might be the first or second quarter, you would also start selling more cars because that would be a something that people would want just because.
Right.
They wouldn't care about. They might already like the fact that it's a super safe car. They might already like the fact that it's a good looking car, has a nice interior. But now this would make it a done deal. This have to have it in because of the self-driving. And so then you could have even more than your 6 times. But even if you take your 6 times, that is something. If you all of a sudden are looking at a couple of $1 billion, even at 1.5 billion a quarter in the first or second quarter of income falling to the bottom line, not only does street need to take advantage, but what you're pointing out is the other factories, the other OEMs are going to have to take a look at that, because that now becomes real money.
Right.
It's not a matter of, oh, I can here's the CapEx I have to lay out. I think that was important. I think you make that very clear. You might be putting out a billion, 2 billion, 3 billion a year trying to get to Tesla. But if you're now looking at a protracted time of CapEx expenditure, and in the meantime, your competitor is bringing in 5 times that much in terms of income, of literal bottom line income. That's something you can't ignore. I don't think you can continue to ignore that.
Right. And the other thing in terms of the when does it hit the share price thing is that, so I'm,
And
you
that's
know,
just FSD. This is not Robotaxi. This is just FSD.
this is just FSD, right? Is that it's a matter of when does the street believe, right? And people say, oh, it's priced in. It's not priced in, right? So even the $340 million, they discount it, saying, not fully there, not repeatable, blah, blah, blah. So they have not priced it, right? So, people can argue down the comments, whether they priced it or not. But, my case is they have not priced it. Also, they have not priced in the energy part. So if we're talking about the share price, what's going to happen to it? The energy megapack part, the shipping container size energy battery packs, they're only producing from Lathrop, California. There is a factory which is twice the size of Lathrop in Shanghai, being completed now, 80% done, 60% done. It's going to be completely done in December, and they're talking about starting the first line there. Lathrop has 2 lines, each one produces about 20 gigawatt hours per year. The Shanghai factory has 4 lines, and so then they can get up to 80 gigawatt hours per year. And there's going to be another couple other buildings there. We'll see how quickly that goes. So if there are 30% margin on those things, when the China money starts hitting the balance sheet, the analysts will have to recognize that there's over $1 billion per quarter coming of profit coming from energy. About $3 billion of revenue, which Q2 and Q3 for energy had about $700, $800 billion per quarter from a partially ramped California factory. So they got to full production of 40 gigawatt hours per year. They announced that they achieved that, but there's this long delay, a year of getting that. The energy growth story, getting money from California and from Shanghai and from getting more lines ramped up, that will play out over the first half of next year, maybe into Q3 or something. But then it will, at some point, the analysts will recognize that, holy crap, it's going to be 80 gigawatt hours from Shanghai. It's going to be profitable. And China will install those megapacks storage faster because the year delay is a megapack comes out at the end of a factory. I cannot recognize the revenue. It has to get sent to wherever it's going to be, say, goes to Arizona where there's a bunch of solar stuff. It has to get put onto a cement pad, which the utility was smart, would have, ready built the pad and ready to hook it up. But in the United States, it takes a long time to hook up this 40, 80 ton piece of equipment. And then they have to hook it up. And then the company, which could be like a Pacific Gas and Electric in California, what people don't know, a highly incompetent company. So they could, take a long time, the year to get it turned on, right? China installed these things super fast. They install half the world's solar and wind. They have terawatts of it. They build square mile to square mile of solar. They build shopping malls in a month, so they can it's trivial for them to connect up 1,000 energy packs. They could do it if they got the pack in January. They can install it by February. Yeah. So what's your range?
Yeah. So I think you have most of the story. I think there's additional parts to the story, which so in other words, you're saying that by the first quarter, certainly by the fourth quarter, we may already be seeing it in January because we'll probably see another very good quarter for energy. But by the end of the first quarter, we may begin to see some revenue coming from Shanghai. People will start to have to add the Shanghai factory into their numbers. You've also, as you pointed out, they'll be adding, which again was new to me, the idea that the numbers on the full self-driving uptake will start to really look much better, maybe in the fourth quarter, but certainly by the end of the first quarter, we should start to see that. Then the one that I've been adding in, Brian, which you didn't add in, which I think is even a bigger secret. It helps you to know if you're a stockholder, because that's called arbitrage, to know something that they don't. Anyway, is all the what's inflation reduction, the IRA money that's going to come in from battery production of the 4680s, as well as probably the CATL line that's being put in Reno. So probably also by the end of the first quarter, we'll start to see that even though this is going to be harder to see because it's in cost of goods, but maybe eventually they'll make that a separate line item, at least in the 10Q, so we can see what kind of money is coming in from, although maybe they don't want to, because if the government realized how much money they were sending. But we're talking about $1 billion a quarter, Brian, in addition to everything else. Another billion, undoubted. I mean, if we just get to 100 gigawatt hours of 4680 production, we're talking about $1 billion a quarter just coming from the IRA money. So all of that could start to really show up in a major way before Robotaxi, before Optimus, by the end of Q1, certainly by the end of Q2.
Right. And so it's the recognition by the analysts in the street,
Right.
by the major Wall Street funds, and also for the vast majority of retail investors.
Right.
So the investors have to realize, both retail and institutional, that this is happening. It doesn't have to fully happen, but then they'll have more confidence in it because they'll see the revenue increasing.
Right.
That they'll see, okay, we're going from $700 million profit in energy to 1.5 billion. We're going from $300 million, $400 million from FSD to $1 billion, to $1.5 billion. And then they'll have to put into their spreadsheets authorizes FSD.
Right.
So the vast majority will have to put in a number. They may try and discount it, right? To say, okay, the probability, they'll discount it. But then, especially if there's a surge of Chinese sign-up, according to Frida Duan's analysis of them, the customers there, that they really want, if they have a self-driving system that works, the adoption rate could be far higher than the United States. It could be 50%.
Isn't there even a bigger deal going on with China? I mean, the upper middle class in China, the upper class and the upper middle class in China is these guys, mostly guys, but guys and gals, they are maybe worse than Americans in terms of wanting to show off their new toys. I mean, that's what I've heard anyway.
Yes, the case. The evidence for that is that over half of the world's luxury items,
Right.
The Gucci bags, the LV bags, all that things is sold in China.
Right.
So that is evidence that they do spend more on luxury items and to show off.
There's some movie, Rich Crazy Asians or something.
Yes, crazy rich Asians.
Am I being racist when I say that, Brian?
No, I'm Asian, so I absolve you of that because I can do that.
You have that absolution capability. Yes.
Because I'm Chinese, I can absolve you of that. So but the main point is that it's when did it go into the stock is when everyone recognizes it does.
Right.
Countering that is that when NVIDIA had its 10x, from just under about 2 years ago when ChatGPT came out, and Jensen Huang for a year before was pound table says this is coming, AI is huge and great, but then they went down because Bitcoin and crypto miners were down, and then it all turned around and they went up 10 times, right? How did that 10 times thing go? There was a jump 20%, 30% in the quarter when ChatGPT came out because people say, hey, this is going to be big, but they didn't know how big, right? Then the revenue started increasing. It was shockingly fast, started to go 50%, doubling after 2 quarters. PE did not multiple. The stock went slower because it needed every quarter for them to say, okay, it's really happening and this is how much. And then they had the worry, maybe it's not going to, right? That still now, they're saying like maybe B200, the next generation chip won't be that great in terms of sales, whatever the production issues. There's always that worry that's going to happen. And then there's worry that Microsoft, XAI, Meta will stop upgrading, or slow down their upgrades, or margins will decrease.
Or all kinds of stuff.
Right. But NVIDIA went to, from like 40% margins, 50% margins, up to 75% margins, double the price of their cost initially, but then they went to 4 times.
Right.
And so they had these huge gains, and the profit did go up, 5, 10 times, but the stock did not, like where they say, okay, you've achieved monopoly and you're going to keep it for 10 years. That did not happen to NVIDIA pricing. Right. So same thing for Tesla. They will be that doubt that, so the more things that actually happen, the actual revenue growth, they say, okay, it's happening as expected. But then sustaining it quarter after quarter, and then beating your guidance, giving guidance and saying, okay, we're going to do this. And then, we surpassed it with a huge amount. The FSD, we got into China, we got into Europe, and now we get to Superhuman by middle of the year, which we said we would, and they actually do it. And the predictability of that is good because Tesla AI predicted in September what they think they'd do in October, and they basically did it, and they predicted in October what they're going to do in November. So having that predictability around that, and also predicting how much money we're going to make, right? So as Tesla learns that, they can then communicate that. So that's part of the share price, right? And also actually getting the deals. If Ford, Volkswagen, BYD, Toyota, if they all start saying we're going to license, is analysts putting those things without discounting, not saying maybe it happened, I give it a 5% chance, or the timing is something weird. Because the Royal Bank analyst, he believes in all the energy and the Robotaxi story, but he says Robotaxi is not going to happen until 2040.
Right.
So then he pushes it out far enough so he can keep his guidance to $300, just over the existing price.
Yeah. So your story about NVIDIA makes total sense. I get it 100%. But even in the description that you've already given, you're not talking about one. I mean, NVIDIA, yes, they have other businesses, but their other businesses are not exploding like their chip business is exploding. That they have one product that's exploding with high margin. With Tesla, you've already described energy, which is at a 30% margin, which is exploding. We've just talked about the battery business, which is pure money just coming from the government, write a check. We've got the money coming in from the greater uptake of a software item with zero cost, which is billions of dollars per quarter. You haven't even gotten to Robotaxi yet. And then on top of that, we've got the semi, which you and I have discussed could be as big as almost as big as the entire car business if they decide to take it that far. The TAM is there. The question is only whether they're going to do it or not. The energy business is a fraction of what Elon says he wants to do in terms of 3 terawatt hours. And then there's only this little product called Optimus, which is going to be manufactured at scale next year. 2,000 to 3,000, I guess 1,000 to 3,000 units for testing, and then go into full production the following year. I mean, we're talking about a complete array of products. But I guess the most important one for this show would be the next step will be Robotaxis actually hitting the streets in third quarter.
So, and that can be shockingly fast. Tesla has already for last year been offering ride hailing with the supervised drive for their employees in California. So that's basically 20,000 employees. So then if you had half of them, and I don't think they're at that level yet, but they could give rise to those 10,000 to 20,000 employees. Let's say only half of them, 10,000. So that's a morning commute ride and then an evening return ride. So that means 20,000 rides per day, 100,000. Waymo is at 150,000 per week right now. And then if you do Texas, that's 30,000 employees. That's another 150,000 rides, again, with only half penetration. If you have full penetration, it would be more. And those vehicles, if you're doing it with 10,000 vehicles in each location, if you offer that to the public, those same vehicles can offer more than 2 rides a day. You could do 20 rides in a day. So suddenly you'd be 10 times bigger. And if you do more vehicles, 100,000 vehicles, you could be at 100 times the number of rides for Waymo. Waymo's probably only making, $15 million. But if you do 200 times that, you'd be at $3 billion. Not all earnings and profits are equal.
Right.
If you have one where everyone knows the ride hailing at $1 per mile driven instead of $2-3 for Uber means a disruption of that market and a market 10 times bigger. So it is that $1 trillion market. So that would cause, again, recognize that is well on the way to happening, which would happen with the California and Texas public rollout and a large scale 10 times, 100 times larger than Uber operation recognized by the streets far more. Probably the analysis would need to be like when AWS was finally recognized for Amazon,
right.
That you'd have an entirely new line of business with huge profit margins. If they can fill in, here's the profit margin, and it's going to be 80-90% of Robotaxi, even though they're not quite there. If they see that the clear stability state would be that, and the growth rate would be huge, particularly if you got licensing of Robotaxi in China as well, not just California and Texas. Then those combined deals would have the market get ahead of it. The counter to that is that you can suddenly shoot up to $1,000, but then any delay, China throws in a regulatory delay. That would, cause wild fluctuations.
Yes. So if we get regulatory approval for the entire state of California anytime next year, I don't care when it is, it would be nice if it was in time for a rollout in the third quarter. And that's what maybe a lot of people are now assuming is somewhere around June or July, we'll have level 5. We'll be able to just, sleep in the car, whatever. And so robotaxis will become a thing. Most people don't realize that by the middle of next summer, there will be 1.5 million cars. I'm sorry, Tesla cars in Southern California. I mean, in California, rather. 1.5 million that will be capable of doing this. Now, some of them are maybe, the hardware 3, and maybe there won't be quite, but okay, a million. So a million cars ready to go with hardware 4 in quarter 3. And let's say we only get 5%. Well, now you're talking about 50,000 cars immediately that are putting the cars out for robotaxi. My guess would be that Tesla, once they can see the final, and maybe they can see that now, will stop reselling the lease cars that are coming in. They will stop reselling the trade-ins, the Tesla trade-ins that are coming in, and they'll start those will be accumulating in lots all over California. And then when the day comes and they can switch it over, kaboom, they're ready to go with maybe another 10,000 cars that in their own fleet. So the revenue generation from that will be massive the very first quarter that it happens. It won't be like, a few $100,000. It'll be millions, hundreds of millions of dollars the first full quarter that they have that kind of operation.
And because they have the capability to produce more cars. Right now, their factories can produce 3 million, and if you increase lines and do stuff, you get to 4 million vehicles. Right. They're only producing 2 million. So if you can make $20,000 per year or $40,000 per year from a robotaxi, right, then they would immediately go to maximum production, within a quarter or something like that. They would hire all the shifts and then get to production. So then there'd be a rapid acceleration to 4 million cars, and 2 million would be dedicated, even though they're Model 3 and Y, or, or 1 million might be some Cybercab, or they're talking about 2 million Cybercabs by 6. Right. The growth in cars could suddenly shoot up to nearly 4 million by the end of, and then 6 million, be 7 million by the end of 2026, because the only vehicles that could do this would be their vehicle. Sure. And then, margin, other things all increase, all that kind of stuff. So the turnaround in the car business from the fact that they have fully solved robotaxi at scale would be a massive thing. And again, that would, flip the psychology, because currently all the analysts are projecting maybe, going from 1.8 million cars to 2.1 million cars next year to 2.4. 2028 gained to just under 3 million cars. Right. So the slow growth, that's what the street is projecting. And so they've basically been projecting no growth. And still the stock this price and all this kind of stuff. So if suddenly you have energy growing, doubling every year, the 50% to doubling growth because of the demand from robotaxi and your robotaxi and all this kind of stuff, then the shock could be similar, not dissimilar to the 10x move that we had when Model 3 and Y became profitable and at scale, transitioning back in the 2019-2020 period.
Yeah, and then Optimus just becomes a rounding error.
Right. No, well, yeah.
Actually, it doesn't become a rounding error; it becomes another 5 times.
Right. Yeah, Elon said $5 trillion for a robotaxi value company, which I think he could be underestimating there, and then 25 trillion for one with Tesla bought. And the fact that you have a robotaxi fully solved, a lot of that AI software transfers over to the capabilities of the Tesla bot. Right. Plus, if you have a robotaxi driving your Tesla bots around, the Tesla bot only has to get off of the car, pick up a box, and deliver it, and then you're doing a bunch of very valuable use cases.
And then there's your favorite subject of all, we haven't even touched on it, which is autonomous semi-trucks.
Right. So we're going to talk about in the next video of the world with super driving and super robots, where we'll discuss the impact of all that and go deeper into all the effects of these. So join us next time.